What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 18th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to not only talk about the rounding highs in Bitcoin's price, signaling that we might be entering into a short-term top for a much longer-term cycle here. So again, not entering into a bear market. But outside of that as well, spend some time to talk about how that will lead to the upcoming second phase of the 2021 altcoin cycle, which is going to be absolutely crazy from what we've seen so far. And also even dive into 3 specific cryptocurrencies that I highly recommend you guys continue to look into and do your own research on. So we'll talk about those today. And outside of all of this as well, we're going to have a sponsored review of EnergySwap, an automated market maker or decentralized exchange for the energy blockchain. So stay tuned for that towards the end of the video. You guys won't want to miss it. All right, so let's go ahead and start off just taking a look straight at the charts here, guys. Turning off our drawings here. I actually, in fact, removed most of the drawings here, even though we've had some pretty accurate predictions on how these kind of higher highs and higher lows would set in. We would break out against the line of resistance as we did over here. We'd make it support, continue on to the next cycle, right? Putting all that kind of short-term technical analysis aside, there's something that the bulls probably don't want to talk about. And I'm a Bitcoin bull, I'm a cryptocurrency bull, but at the same time, as much as I'm a bull, I like to take the bearish narrative when it makes sense. I'm not biased towards my own predetermined positions. If I'm holding a position in something, my end goal in this case is to win in the market, to grow capital in this case, just like any investor. And you can love crypto to death, but you need to be able to look at it in both ways. So why am I starting to feel a bit bearish? Why do I feel like the bears might start winning out here? Well, there's been a lot of metrics on chain that have signaled that more and more people are starting to sell positions in the short term. And along with that as well, not just even considering the inflows and outflows that we need to look at and analyze, but just looking at price, it's giving it away to us right now. Take a look here at the relative highs, in this case, the new highs that we've been setting, and the relative lows here. And so far, I have to say one thing that is looking really clean is the higher lows here so far. I mean, higher lows have been, the significant higher lows once we have pullbacks have been at significantly higher levels, thousands of dollars higher from the previous ones that have been set. So the lows here are looking pretty good. They're the base for support here. They're showcasing that when a dip comes in the market, buyers are coming in. But there's also a secondary portion to price discovery here that we need to watch for. And that's when the bulls are no longer buying. When the sell side pressure outweighs the buy side pressure, which is basically the highs that we set in, right? We set in a high here back exactly on January 8th before we started off the first correction here after the 20K break. We had one here as well on February 21st of 2021. And then a third one here, quite clearly, around the 13th of March. Now, can you guys notice anything about this chart here? And I want to give you a moment here without me talking, just looking at this chart, and what do you notice about these 3 significant highs? What does it signal to you when you look at the chart here? Go ahead and I'll take a sip of my tea here. Give me a moment. When I look at this chart, as a naked trader in this case, and don't worry, you guys can see I'm wearing clothes, I'm not naked. What I see in this chart is higher highs in this case that are not growing at the same rate they were previously. It signals to me that in the core element of price analysis, not even looking at the complexities of indicators and the RSI, the MACD, the moving averages, none of that. Just looking here at price, you can start to see that the bulls are selling and taking profits on Bitcoin on the spot market, which is what really matters. That's where price is determined. They're selling it at lower intervals, or at least lower divergences or differences from the previous all-time high. The difference between these 2 all-time highs here, right? When we set this, it was an all-time high. And when we set one here, it was an all-time high. Or these relative higher highs, right? However you want to label them, there's a much shorter difference here than these 2 previous ones, which is signaling that people are probably a little bit concerned about the upcoming potential retest on the logarithmic chart here, which I can pull up. right? When we take a look here, we're getting very, very close to the logarithmic growth curves here. Now, again, I know everyone is a bit subjective on how they draw them, but roughly speaking here, you can see that no matter how you're going to draw it, you're coming up into a range here, which we've been eyeing for a very long time, and most analysis will showcase is a point of potential resistance. And that is somewhere around the ballpark of around $70,000. And with the anticipation for that, maybe price doesn't even get all the way up there as people take profits early. Smart money tends to be a little bit less greedy. They tend to take a little bit of a lower bid here and get out of the market and take profits. Perhaps we don't have the matching buy side pressure to get us to 70K just yet. Do I think that we're going to go beyond 70K to 100, 200K down the line? Yes. But what I want to talk about today a little bit is the potential here for a sideways move here in Bitcoin's price, similar to what we had back here in June of 2019 going into October of 2019, probably in a much shorter time frame, where we pull back, we have some kind of sideways price action, and eventually break above this logarithmic growth curve here of resistance. I think that we are going to break this, guys. I absolutely do. I think that there's a chance for it, but I don't see it yet. Because after Tesla and MicroStrategy and all these big billion-dollar buy orders, I'm not seeing the same follow-through here that we expected after the Tesla news. Companies en masse have not been making announcements of acquisitions into Bitcoin. And sure, some of it's probably happening behind the scenes, but some of them are also probably waiting for a discount. They're probably not looking to buy when Bitcoin has already made the massive multiples that it has. Corporate treasurers don't just go out and buy things, right? They want to make sure they're getting a good discount. Buying Bitcoin at a 30, 40, 50% discount is much better than buying it at all-time highs, at least in the risk perspective of most major money managers, right? So anyways, that's something to consider here. No, it's not something to per se be bearish about. I'm not saying Bitcoin's going into a bear market. What I'm saying here is that we could have generally this kind of U-shaped pattern like we saw, and this would play into the theory of the expanding cycles, something that we've talked about for some time here on the channel, where that we would go into sometime here, probably going towards a parabolic level like 200K, going into late 2022, possibly even setting in here towards the fall, and then seeing a massive or major correction here in Bitcoin, leading towards a secondary altcoin cycle that would be massive, right? So just wanted to kind of talk about that. I'm growingly confident, and I know a lot of people that I respect within the space that are starting to take that argument into account, that we might be facing some resistance here with the historic significance that this has had for the last 3 times we've had Bitcoin move up here on a logarithmic chart. But I want to go ahead and make very clear here that I don't think that we're entering into a bear market. And second off, this doesn't mean that there can't be a massive wave of potential opportunity as price starts to stagnate and liquidity starts to shift. Bitcoin is now a multi-trillion, okay, not per se multi-trillion, but it's an over $1 trillion asset here in valuation. And this means that a lot of that valuation liquidity can start to circulate to other cryptocurrencies. And again, play into the discussion of the secondary phase of the current alt cycle that we're in, and then also, as we talked about earlier on, setting the stage here for a second altcoin cycle later down the line. Now again, ignore per se the time distance here for this portion. I really want to focus here on this first cycle here. We went through the first half here from back in January when we put out our altcoin video for 2021, and we've been able to chart up about halfway here to the 38% market dominance point. But now, after we've been holding sideways here, signifying support on previous resistance here, and then also a previous level support back here, as well as previous resistance back in the past. This 36 to 38% mark has been very, very important historically. We are holding at this level now. It showcases, and if you haven't been seeing it through NFTs, if you haven't been seeing it through DeFi, if you haven't been seeing it through oracles and all the other facets of the altcoin space, the optimism is here, guys. It's just waiting for that catalyst moment where some of the larger cap plays really start to pop off. Ethereum with optimism, Cardano with Gaugen in this case, the smart contract update that Cardano is bringing to the plate, right? A lot of these major plays starting to actually swindle and capture some of that market dominance, and then also liquidity from those plays and also Bitcoin circulating into the mid and small caps. Those are those crazy multiple returns that you guys see on the market. And it's not me just saying that like it has to happen. It's just it generally does happen. And I think that a realistic target for that secondary phase is going to be peaking at around May. So the question here remains, what kind of positions do we want to watch in the market? What are some of the plays that I'm currently excited about? I'm going to be honest with you guys, and I think honestly this kind of is a given in this case. The 3 plays that I want to talk about today, I do have positions in. I don't mind saying that. I like doing it actually for transparency's sake. And it's kind of one of those things where you got to put your money to where your mouth is. Like if you're not placing a bet on them, then why would I, if I wasn't, let's just say that if I wasn't bullish on them, I wouldn't have positions in them, and vice versa, right? If I'm bullish in them, I'm obviously going to be investing in them. And the really great thing here, guys, again, that I always like to be candid about and honest, is that you're going to find a lot of influencers who will just kind of talk about, again, the micro caps and things that will benefit them the most. This is actually a very good balance between, large, mid cap, and small cap plays in the market. So I want to go ahead and dive into what those plays are and talk about why fundamentally I stand by them, right? So let's go ahead. We'll talk about it from a large to mid to small cap kind of philosophy here. I'm going to go first off and talk about Uniswap. Now, I know that this is not breaking news to any of you out there, as Uniswap was one of our top cryptocurrency plays. It was number 3 for this year in 2021. And outside of that as well, Uniswap is one of the major DeFi plays. Now, I understand a lot of people would look at the market capitalization of Uni and seeing that it's a large cap, they get discouraged and say, Nick, isn't Uni too high right now? It's climbed up from around $3 per token down to $31. Aren't I too late to the game and stuff? And look, guys, I'm not going to be here to tell you guys what you should and shouldn't buy. That really has to be something you determine. I want to spend time there to talk about why I personally think Uni can not only possibly go higher, my personal opinion, but outside of this as well, why I haven't felt any hesitation or need in this case to get rid of my positions. Uniswap itself has a really prime opportunity, right? To be fair, the actual kind of fundamental value of a governance token like Uni in this case, and overall its utility long term, that is really still up in the air. I say that about all governance tokens, even as a big fan of Uniswap and Compound and all these other DeFi projects, right? The core direct utility of the token as a governance token is questionable. It does give you some great voting rights over a massive reserve asset to allocate to grants and to build other types of functions on the Uniswap protocol and to vote. But putting that aside here, I want to talk about Uniswap's technology because there is an inherent relation here, whether we like to admit it or not, from adoption and excitement around a protocol and usage of the protocol to its fundamental token value. We've seen that with Uniswap. It's the largest DeFi token because of it being the largest DeFi protocol. Uniswap has a really unique position here when it comes out with Uniswap v3. If we have Uniswap v3 launching this month, where you have features, for example, that could be things like single-sided liquidity, where basically you can provide liquidity to a liquidity pair, basically any type of trading pair in this case within its automated market maker, where you can actually provide your tokens and earn fees over time. If you bring about layer 2 scaling through optimism or optimistic rollups, as it's commonly referred to as, where you'd be able to reduce gas fees to practically nothing. So wallets like Digifox that plug into Uniswap or other providers, even the core Uniswap protocol offers it through other wallets like MetaMask. If you have these 2 features here, you have the perfect storm here to build a vortex of liquidity sucking into the Uniswap protocol to make it the most ultimate exchange that the vast majority of users can use, where any token is available for trading, where in this case, you allow for liquidity, even just single token holders, to start earning fees by staking through the Uniswap platform and providing that liquidity, making it the most liquid automated market maker and exchange book out there on the planet, and having fees that are practically non-existent outside of the standard LP fee of 0.3%, which is far beyond what Coinbase charges and far beyond what the vast majority of regulated usable exchanges actually charge at the end of the day, unless you're trading on Binance or more of the active exchanges that might have 0.1 or 0.2%. Considering that business model and the fact that maybe Uniswap could come up with a way to reduce that LP fee, right, now that they're going to have a much larger market of LP tokens providing liquidity. I honestly can't tell you guys of a DeFi protocol that has any chance to compete with Uniswap as an automated market maker. And I say that as someone who has used all of them. I've tried all the different providers out there. I've been following DEXs for a long period of time. This, to me, gives me reason why I think that Uniswap has such a kind of well-positioned lead on the market with its market share and liquidity to be able to just suck in all of this value within the automated market maker and decentralized exchange space. So again, I don't mean to be too big picture here. And again, if you guys would like me to kind of further clarify on this, I'm happy to do a video talking about it. But again, for those who don't know, just to kind of run through it, Uniswap is a decentralized exchange. It's one of the most used decentralized apps on the planet, and it's so simple, but it's clean and it works. And it provides the most clear utility function in the space, which is trading from one asset to another in a decentralized fashion and permissionless fashion. So I highly recommend you guys take a look through Uni, take a look through the Uniswap protocol. Again, as the protocol continues to grow, I have no doubt that whether it's the excitement around managing the governance system, or I think honestly what's going to happen is Uni is going to be able to be used as kind of like a utility token in the future. I really see that happening as people continue to kind of question, what can I do with my Uni tokens? Being able to use that to pay for LP fees or liquidity provision fees, I think that that's going to come in the future. But it's just a theory that I have. Again, it's not set in stone. All right, next up here for mid caps, we're going to be taking a look at Stacks. So I want to talk a little bit about what Stacks is as a project in this case and what they're offering to the table. The big topic here, the headline, is DeFi for Bitcoin. Now, for those who don't know about Stacks, or originally known as Blockstack in this case, they've been a project that's been around the block for some time. They've done everything by the books. They built a really interesting set of technologies. But the most interesting thing that they're working on right now is the Stacks 2.0 platform, or really the Stacks platform, that's going to give out the ability for people to build smart contract style applications on a secondary layer above the Bitcoin network. So imagine what the Lightning Network always wanted to achieve, but removing a lot of the complexity and also not just focusing on payments, but building out an actual framework to build applications like you see on Ethereum. So a Uniswap style platform, the ability as well to build lending platforms and borrowing platforms that allow people to lend and exchange Bitcoin in a liquid fashion and use Bitcoin as real money and different types of programmatic functionality that you can't do on the core Bitcoin network, where it's just Bob to Alice type transactions. This to me seems like a really killer use case for Bitcoin. The approach that the Stacks platform is taking is much more mature than what I've seen. It has the ability to actually reach people, unlike Lightning Network, which, to be fair, guys, has really stagnated over the last 2 years. It has not seen increased amounts of liquidity come in if you actually look at the amount of Bitcoin on Lightning. I'm really excited to see a layer 2 solution come, because having more scalable payments is very interesting and intriguing for Bitcoin. And outside of that as well, having the kind of functionality that we're probably never going to see or not see for a very long period of time on the core Bitcoin network is really exciting to me. It's genuinely exciting. I think, not tapping in to this $1 trillion plus asset and building a DeFi ecosystem around it, the most sound money in the crypto space so far, I think it's shooting Bitcoin in the foot, right? So overall, I really am excited about it. The price here has been gaining some good traction here over the last year. I don't know why my charting application on CoinMarketCap is not working well here, so I'll go ahead and refresh it here real quick just so you guys can see the actual chart growth here. But it's been doing very well here over the last couple of months, and it started to gain some traction even against Bitcoin's price here over the last few months since back in February. So again, I highly recommend taking a look into the Stacks platform here. Again, there's a lot of different resources that you can tap into to learn about it, but I think the overall narrative is very clear here, guys. Building DeFi for Bitcoin could be really, really exciting in the long run and bring about unlimited potential as Bitcoin becomes an emerging store of value across the globe, now that we've gone over that $1 trillion mark. And what I like too is that on a valuation basis, it's really only sitting here, even at a fully diluted basis, at $2.3 billion. Again, what really matters is the current circulating supply market cap, which is 1.3. So again, I think there's a lot of room to grow as Bitcoin is $1 trillion plus asset here. So the last component here in the small cap that I want to talk about is a project that I've been advising with and working with, and that's no other than the Benchmark protocol, or the MARK token. Now you guys probably remember I've talked about Benchmark a couple times here on the channel as I've been advising and working with them over the last few months. But to put it simple, Benchmark protocol builds off of a really exciting concept of rebasing currencies. So some of you who've watched the top 10 altcoin video for 2021 might remember that I talked about currencies like Ampleforth. There are a lot of other ones. There's empty set dollar. There's a lot of different kind of alterations and attempts at building rebased currencies. But the very simple concept is this. You've got tokens in this case. So let's say, for example, Bob, or let's just keep it really simple. Let's say I own one MARK token in this case. The MARK token's objective is to peg itself towards the SDR, which is a financial asset issued by the IMF. In other traditional rebasing currencies, you usually try to peg it to the dollar. But the SDR is roughly around a dollar. It's about $1.14 for the most part in value. But it's a basket of other currencies. So its objective is to constantly hold a peg at a specific price. And when it does diverge, in this case, in traditional rebasing currencies, let's say it goes above the intended peg, you actually get more coins, increasing the supply and incentivizing people to sell some of their tokens to take on the arbitrage opportunity. And vice versa, if it goes down below, people start to lose the tokens, so the supply goes down and supply starts to dry up. And eventually, in this case, hopefully leading to the effect that drives price back up to its peg. So very similar mechanisms to what we've seen here with currencies like DAI, one of the major decentralized stablecoins out there on the market. But the thing that Benchmark does different is it not only pegs itself to the SDR, so a basket of currencies rather than one singular currency like the dollar, which helps to mitigate market volatility and depreciation of just the dollar itself. But outside of that as well, it also uses the VIX, or the volatility index, as a measurement to either increase or decrease the supply. So instead of depending just on price here, it's actually using a market index that measures traditional market volatility, so that when there are periods of volatility in financial markets, there are more mark in circulation or given to mark holders to be able to provide more stable liquidity out there in the market, and vice versa. When the VIX deviates from the lower band, in this case when things are really unvolatile, in this case the supply generally depreciates. So Benchmark protocol in this case is not only building out this really interesting type of new stability-based DeFi asset that has this opportunity to grow and decline over time, but outside of that as well, they've got a lot of really interesting things in the works. Again, some things that I can't talk about with you guys, but I will say overall here that I really, really love is that it's kept up very well with Bitcoin since it really started to leapfrog at the initial phase of the altcoin cycle back here and back in January. And since here in March, has been holding up quite well to Bitcoin, holding the vast majority of its gains. I love the momentum, I love seeing the volume, and also all the developments that are coming from the project. So I highly recommend, if you guys haven't yet, to take a look into what Mark stands for, what its idea is, reading through the white paper and understanding the concept behind it, and why it's likely better in many cases, especially as a fair launch crypto. That's a big, big part for me, that they went down the fair launch approach, than a lot of the major plays like Ampleforth out there. I'm really much more of a big fan here of Benchmark in the long run, and I've continuously grown eager to see how the protocol is going to continue to develop. And it's also multi-chain, so it's on Binance Smart Chain, it's on Ethereum, it's on a lot of different chains here in the long run, which is really exciting to see that it has this kind of diversified approach to make sure that no matter what layer one really wins out here throughout the next year, that they're going to be positioned and already embedded within those ecosystems. So anyways, guys, I've rambled on enough about the general market here and these three coins. I'd love to hear what you guys think. And again, for transparency's sake, again, just to emphasize, guys, yes, I have positions in these. And as I mentioned, I do work with Benchmark Protocol as an advisor. It's one of the few projects since all the way back in 2017 that I actually wanted to put my name to. And I really like what they're doing. So I highly recommend you guys look into the Benchmark Protocol, look into Uniswap, take a look into the Stacks platform, and let me know what your thoughts are down below in the comments. If you guys think that these are valuable use cases within the cryptocurrency space. That all being said, guys, that's it for the core part of the video. So let's go ahead and dive into the sponsored review of the Energy Swap platform, the native automated market maker and decentralized exchange for the energy blockchain. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look over a protocol known as Energy Swap, a native automated market maker or decentralized exchange for the energy blockchain that allows users to swap from one token to another seamlessly, similar to major protocols like Uniswap that live on Ethereum, but without all of the gas fees and long settlement times and complexity that come with using the Uniswap protocol. So I want to go ahead and spend some time to dive in today with why I believe Energy Swap could be a really interesting protocol that helps to leapfrog adoption of the energy blockchain, and talk about some of the details about it, as well as give you all a real quick precursor for those who may not know about what the energy blockchain truly is. So for those who may not know, the Energy Blockchain was a self-funded blockchain project created by its founder, Tommy Power, who's also another fellow YouTuber in the crypto space. I gotta tell you guys, just as a quick kind of side note, I always like to joke with Tommy and the team that I actually wanted to create a project very similar to Energy way back in the day that was gonna be self-funded. And I always love seeing the Energy project continue to expand because they did things in a fair way. They self-funded, they did a fair launch that allowed for people to get free tokens through the Earn Drop campaign. And it allowed the community to be extremely decentralized while also taking a lot of notes from major projects like the Dash project and when it comes to its treasury model as well as governance. So I highly recommend you guys do a deep dive on Energy if you haven't already. Many of you are already fans of the project here on the channel, but let's go ahead and get straight to the subject matter here. What is Energy Swap? Energy Swap is an implementation of the Uniswap protocol for the Energy blockchain. As you'll notice through the user experience and the functionality, a lot of it ports over as the Energy blockchain allows for Solidity contracts, in this case, traditional Ethereum projects, to migrate over seamlessly to the Energy blockchain that has much higher throughput and can offer zero fee transactions, which is really, really exciting, or near zero fee transactions. So let's see here, for example, how things look. We have the Energy Swap, which allows us to actually utilize a variety of tokens that have been brought over from the Energy Ethereum bridge, which allows us to basically bring over non-native assets like DAI, BTC, Ethereum, Uni, YFI token or the Yearn token, Link, Aave, Synthetics, and 1inch, and possibly even more tokens down the line here as they're continuing to port more and more over and provide liquidity on the Energy Swap platform. This allows us to port over existing assets on Ethereum to now migrate our net worth, or our assets in this case, over to the Energy blockchain, and from there start to trade between one asset to another for really only having to pay 0.3% for the trade, which is the liquidity provision fee, or the LP fee, that you have to pay through native automated market makers like Uniswap. So what's really great here is that it really abstracts the really high gas costs that people are experiencing. Some people have to pay 30, 40, 50, $100 depending on the time you're trading on Uniswap at the moment with how high gas fees are. And on the Energy blockchain, you completely abstract that. So basically having low fees is one of the first key utilities here that opens up Energy Swap to so much more participants to build an actual liquid market. Now, I want to go ahead and dive straight into taking a look at the Energy Swap platform here. There's really not a crazy amount of things we have to dive into. In fact, the big thing I want to talk about is really the vision long-term of what Energy Swap aims to achieve. So for those who have been following Energy for a long time, there originally was the idea of the Energy X exchange, which was going to be this zero fee swapping platform. That's basically what migrated into the Energy Swap platform as people preferred the simplicity of automated market makers. And the way that it works is quite simple. You start off with a native asset in this case. In most cases, people will probably be trading the energy token or starting off with one of their tokens that they ported over from the bridge. And then from there, you select a secondary token you want to trade against. And as we mentioned here, there are a lot of other tokens that have now started to be ported over here, but it really depends on how much liquidity there is on one of these tokens. So 1inch was one of them that we started off with, but again, as you can see, even some non-native ERC20 tokens, like the 88 token in this case that isn't an ERC, is now available through Energy Swap. So really bringing cross-chain assets here across the board. But we can see that through Energy here overall, I want to trade maybe 2 1inch, and I'm going to get 5 1inch tokens for my 10 Energy tokens. You can see that the price impact is very low here, very low slippage as they continue to increase the amount of liquidity that are available for tokens across the board. You have the standard liquidity provision fee. This is to help reward those who are providing liquidity to the platform to make trading slippage very low, as we're seeing right here. And we can see the minimum amount I'll receive here. And all you have to simply do is just connect a wallet in this case, and you can start trading, which is really, really exciting. It's very familiar to most of you who have engaged in the Ethereum ecosystem. But I want to dive into some of these different elements here. We have the swap tab, which we're on right now, but there's also the pool tab here, where we can go about adding liquidity. So we can add our energy assets, either the energy coin in this case, which kind of serves as that reserve asset, similar to Ethereum is the reserve asset for the Ethereum ecosystem. But outside of that as well, we can also pair it with a variety of different equivalent kind of ERC20 tokens that have been ported through the bridge over to the Energy blockchain. But then there's also the analytics tab here, or Energy Swap info. So we can see the increase of liquidity over time, as there's around $8 million liquidity. We can see the daily trade volume here going through the last couple of weeks. And we can also see the top tokens here by liquidity or measured by volume to see who's actually trading it. Now, to be fair with you guys, again, I'm not going to lie here in this case. We can tell here through the metrics, Energy Swap is new. Energy, as well as a blockchain, surely isn't at the point of Ethereum. But in the sense of its functionality, it really provides the setting stage here for a lot of protocols to move over and a lot of liquidity to move over to be able to actually engage and utilize these new technologies on a much more scalable blockchain. We can see the clear liquidity pairs here, the top pairs. As we can see, Energy DAI being one of the largest ones, Energy ETH, Energy BTC, Energy Uni. a lot of major places that you can start to trade and, in this case, actually make better trades than you probably would trading on Ethereum, considering not just slippage, but the gas fees that you have to pay right now. So I have to say, even as someone who's built on Ethereum, I really think this is cool. And knowing that Energy has this treasury model and its governance system that will help to flourish and develop on top of what they built here for Energy Swap, and maybe even build out incentive programs to migrate liquidity over, there's going to be a lot of exciting opportunities here in the long run for Energy Swap, in my humble opinion. So again, I highly recommend you guys take a look through it here, understand the ecosystem, look at some of the tools. It's very familiar for those of you who have used Uniswap in the past. But I want to go ahead and talk a little bit again, if you're interested on actually getting started with using it, there's a lot of great things here you can use in order to get familiar on testnet if you want to give it a try there first, or trying it on mainnet. It's launched, it's out there, you can use it. There's nothing that can stop you from interacting with it. And again, this is the really cool permissionless nature of being able to trade from one asset to another seamlessly and not having to deal with the high network fees that you almost feel like you're being held hostage in this case if you want to make swaps or trade from one asset to another. That kind of crippling suppression of being able to actually trade without getting outweighed by massive fees is a huge problem on Ethereum right now. And again, I can say that as someone who's used Ethereum for a long time and has been building on Ethereum. To be able to use this right now is really, really exciting. All right, so now that we've talked about this here, we've dived through this a little bit and stuff. And again, I'll provide these resources so you guys can get started and try it out today. I want to go ahead and dive back in here to the article because Energy Swap here is going to be offering a lot of interesting potential over the long run. If you actually dive back into the concept since back before it was Energy Swap and back into when it was EnergyX, a big pressing point that Tommy Worldpower and the team has been pushing is the development of synthetic assets. Now, for those of you out there who have been keeping up with the Ethereum ecosystem, there are a lot of projects out there. There's protocols like Synthetics, there's protocols like UMA that are coming out and trying to build synthetic assets. But on the Energy blockchain, having the ability to have practically a near zero fee experience while also being able to trade from one asset to another seamlessly through an automated market functionality offers a lot of potential. And that's a big key goal of Energy, is to build out the ability to trade synthetic assets. So being able now to trade, maybe stocks, being able to trade other assets like gold and silver, making it so that the Energy Swap platform is an all-in-one exchange. It covers all the assets you might want. Currency exposure to traditional fiat currencies, other cryptos that aren't native either on the Ethereum protocol or on the Energy blockchain, right? So now if you can pair all these assets into a liquid market, you start to build, again, as we kind of talked about with Uniswap early on, with the right incentives, a single place where liquidity can flow to and people can trade and expose themselves to the kind of assets that they want to. And that's something I gotta be fair, I really haven't seen Uniswap developing in that front of synthetic assets. So I give a major prop to Tom, in that case, and the team, for sticking to their guns on saying that synthetic assets are gonna be huge, because if you understand the size and the market potential of derivatives, which is so much larger than just traditional spot markets, you realize how much market potential is there for derivatives or synthetic assets. So I'm very excited to see the potential future value that could be derived from synthetic assets coming to the Energy Swap platform, coming to the Energy blockchain. And as Energy has embarked on 3.0 quite some time ago, we're now starting to see these material changes flourish here. And I highly recommend you guys give it a try. Try it out on testnet. There's no harm in trying it on testnet and giving it a go, seeing how it works if you're interested on how it should function on a smart contract basis. And then if you're interested, you could try it out on mainnet if you own Energy tokens or if you want to get involved in the ecosystem. There's a ton of resources you can find over at Energy's main website here, energy.world, where you can go through and dive in and understand more about what it's like to engage in the protocol, how you can actually earn energy by running a master node or just staking your Energy tokens, and then also understanding the self-funding treasury and on-chain governance principles. There's a lot of cool stuff going on here that I highly recommend you guys dive into as Energy starts to embark on the DeFi ecosystem, a lot of which we just talked about in today's video. So that being said, everyone, that's it for today's video. If you guys are interested, check out the links and resources down below. Energy is coming out with a really, really exciting push here to DeFi, and I wish the team all the best, especially being self-funded and being a grassroots, community-based project. I wish we could see more of that within the cryptocurrency space. Anyways, guys, that's it for today's video. If you liked it, drop a like, leave a comment down below, check out the links down below in the description, and until the next one, I'll see you all in the next video. Take care, everyone.